Good morning, everyone. Congratulations for making it this morning, if anyone was at the festivities last night. It's my pleasure to help moderate this morning's panel. My name is Alex Murray. I'm a Vice President in Preqin's Research Insights team, and I mainly cover the infrastructure asset class, but you're not really here to hear from me. I'll give my panelists a moment to introduce themselves and give their organizations a bit of a profile and talk a bit about their background, and then we'll get into some quick-fire questions on the LP sort of perspective of things at the minute. And we'll cover a sort of general context, talk a little bit about the Middle East, and then get to some big questions around valuations. So, Bruno, I'll pass to you first, if you'd like to introduce yourself and your organization.
Thank you very much. Bruno Sollazzo, Private Equity Generali. We are a team of 30-plus professionals investing and managing our global private equity program, which is organized on a centralized basis. Therefore, we need to serve all group insurance company investing in our PE company, Lion River. We need, most important, to serve the articulated compliance of a listed insurance group, requiring a very disciplined approach in terms of diligence, and all this is performed through two key functions: portfolio construction, headed by Francesco Cignolo, and portfolio management, headed by Ileana Bolcato. The bulk of our allocation is the mid-market buyout and co-investments globally. We also look at infrastructure equity and venture capital on a limited basis, but we look at these sectors as well.
Thank you very much, Bruno. And pushing on to Augusto, if you could intro yourself.
Yeah, no, thank you so much. Well, first of all, thank you so much for having me here. I'm delighted, of course, to be here in front of you today. My name is Augusto Cárdenas. I'm the head of international operations at Abu Dhabi Investment Office. We are a government entity of the Emirate of Abu Dhabi, which basically serves as a platform for companies that are looking to establish in the Emirate, but also it's an entity that helps the companies to grow from the Emirates. We offer different types of services, but there are two groups of services. The first, of course, we help the companies to navigate the internal ecosystem, to connect them with the right stakeholders. And at the same time, we offer some financial incentives. We have innovation programs to boost the first years of activity of any foreign company in the Emirate of Abu Dhabi. We have 8 offices around the world, and basically I run that activity back there in Abu Dhabi Investment Office.
Thank you very much, Augusto. That's great. In the interest of time, it's quite a short session, so I'll get straight into the meat of it. Let's talk a little bit about inflation. We've had some sessions yesterday that sort of set the scene on where we are with economic developments. It was thought of as transitory, but it lingered a little too long. How is that affecting how LPs adapt to these new economic realities? You know, inflation has spurred a monetary tightening. Is it more of a fundamental reassessment of portfolio strategy, or is it more wait and see how the early first quarter of 2023 pans out? Bruno, maybe over to you.
Thanks for the complex question, Alex. There might be some inflation around the world, I understand. Actually, I think it's important to distinguish between inflation coming from the demand side, typically in the US, and the one coming from the supply side, mostly in Europe, so-called agflation. And we trust that central bank may fine-tune their monetary policy in order to limit the risk of recession, above all in Europe. Having said that, inflation itself is not a driver to inspire our allocation policy in private equity. We think that both experienced GPs and LPs had not considered as their base case scenario a world in which you have almost zero inflation and very low, even negative interest rates. So the adoption of a base case scenario in which this would have stopped sooner or later would have implied, for example, the adoption of very limited leverage, financial leverage in your private equity business in order to be ready to face basically a reduction of margins coming from the supposed more complex world ahead. So overall, instead of using inflation for driving our investment strategy, we prefer in any case to focus on some key macro themes, macro trends, for example, demographic and aging, also combined with the unprecedented progress in biotech. Therefore, overall, for example, we prefer to stay strictly focused on healthcare, because the healthcare spending is going to increase globally, and we want to be very close to biotech as well, because of the unprecedented progress coming from, for example, cell therapy and genetic therapies.
Okay, thanks, Bruno. So it's more of a sort of thematic, sector-based strategy. Augusto, would you like to add anything there, or we can?
Well, no, just a short comment on that. I think, of course, there is inflation around the world, and of course that has some implications, right? There is high interest rates, and the companies are. I mean, if the pandemic taught us something, is to be, resilient and to be innovative. And I think what the companies are looking for are these type of ecosystems where they can operate internationally. And I think the Gulf is kind of positioning itself as one of the few regions in the world that is still redundant in capital, and it has not been very affected by inflation.
Yeah.
And that's why companies are looking now as the center of the world. So I think that kind of shape a little bit the international context.
Yep. Okay, just another one on the context before we'll get into a few questions on the Middle East, actually, because I'm keen to draw on your knowledge and experience of the region. It's a very exciting region to look at the minute, for sure. Let's talk about, this analogy of catching a falling knife, the idea that the monetary tightening might be a little bit overzealous and we might push ourselves into a needless recession, but giving that a bit of application to alternatives and to PE. We're trying to position ourselves with this sort of anticipation of the bottom of the market. How can managers show discipline over 2023 without missing out on opportunities? Because everyone wants to invest at the bottom, but if you wait for the bottom, you might be a little bit too late. When should managers start to get active again to make sure that they're there at the bottom?
Sure. Look, I think the sovereign wealth funds, particularly in the Gulf, I think currently they have an unprecedented demand, right? As I said before, it's one of the few regions that positively, capitalize in the entire world. So I think that there is a demand, but at the same time, I believe what the sovereign wealth funds are looking for, or is the right timing, to generate value in the long haul, right? I think
intergenerational.
Exactly.
Yeah.
They are not looking for a short-term return. I think now is the time where they are looking in the long term, and specifically in the sector view that Bruno mentioned before, very particular sectors that the region believes is going to drive the economy. So I think that is the approach of different sovereign wealth funds right now.
So it's less relevant, I guess, for sovereign wealth funds because their investment horizon is so long. They can sort of look through the business cycle a little bit more.
Yeah, exactly. And look, this appetite, we saw that in the region, right? I mean, and we saw it particularly in Abu Dhabi. 1 month ago, we have Abu Dhabi Finance Week, right? When we have thousands of funds and asset managers flying in.
Yeah.
Honestly, we felt that the island sank a little bit, right? But I think what really meant is, on the contrary, the raising of this falcon economy in a global volatility, right?
Yeah.
So I believe that this is, a region that we need to look at with, and all of you guys, you need to look very cautious attention. What is going on there is very impressive.
Okay. Yeah, we'll come to a bit more coverage on the Middle East soon. Bruno, would you like to add anything about that attempt to sort of time the market? There's a lot of talk yesterday about the multiples that tech companies were going for in the last few years. Obviously, that might not have been the greatest timing. How do you get a good value asset in the next 9 months, 12 months before the recovery comes?
Thanks again for another simple question. And very complex for everybody, of course, to predict something amid geopolitics, pandemic effect, and the dark ideas about the climate change. So overall, as usual, rather than predict, it's quite better to be prepared. To be prepared, organizing our own base case scenario, in which most likely some complex market dislocation are temporary. And therefore, be prepared means basically to keep a very disciplined approach from the GP side, and therefore we appreciate a lot who is keeping a disciplined approach in pricing at any time. And of course, from LP side, from investor side, keeping a small discipline as well in terms of due diligence and market understanding. Because of the specific feature of private equity, it's essential to keep a consistent investment strategy over time. The lesson learned from the great financial crisis that investing in dislocation times, private equity, you can get higher than average returns in the mid-long term. So, of course, experienced GPs and LPs knows this story very well, and therefore they should remain in the market and continue to commit to new capital.
Okay, thank you very much, Bruno. Augusto, let's go to the Middle East and explore the region a little bit more deeply. So, as you've mentioned, the Middle East is one of the few regions in the world expected to stave off a recession in the coming year. In part because of the high oil prices driving investment and growth there. But also there's a lot of favorable demographics in the region. You know, some of these countries are well poised to just see that fundamental economic growth come through because of their young demographics. But let's talk a little bit about sovereign wealth funds. How do you think sovereign wealth funds in the region can ensure they're getting enough sort of global diversification? Because, of course, a lot of their remit is to invest in the region and promote economic development, but also that desire for intergenerational returns means that they do need to look more globally. And how are they doing that?
Yeah. No, thank you both for the question. I think it's a very interesting question because I do believe that sovereign wealth funds have and will keep contributing to the development of the economy. But I don't think it's the only reason why the Abu Dhabi economy is booming, right? You mentioned some demographics, but I think what happens, and maybe let me sum it up in four factors. In my answer before, I mentioned the concept of Falcon economy. And what does it mean, Falcon economy, right? I think in the context that we live with all these inflations, interest rates, it's important to have a stable economy, right? Because yes, we can expect international shocks. I think all of us, we have learned the lessons. Second, we need to have the proper infrastructure to operate domestically, but also internationally. Third, we need to have access to talent pool and retain that talent pool. I think that is one of the big challenges that the companies are facing right now. And last but not least, we need to have a competitive business environment, right? And I do believe that Abu Dhabi has these four factors. And let me explain you very quickly why. First, stable economy. The GDP of the UAE is around $270 billion, top 25 economies in the world. Abu Dhabi represents 60% of that economy. And when you see the behavior in the last 5 years, even with the pandemic and all the shocks, have behaved positively. Actually, the last number that we had was 11% growth, which is a massive number in the current scenario, right? Second, top-notch infrastructure. Yes, Abu Dhabi has 11 international ports, Khalifa Port and the top 5 most efficient ports in the world, right? Yes, we have really got hard infrastructure, but also soft infrastructure. The Abu Dhabi government has heavily invested in ICT infrastructure. And now Abu Dhabi has one of the fastest, if not the fastest, internet broadband connections of the world, but also legal infrastructure. The ADGM jurisdiction is outstanding. It used the English common law within Abu Dhabi to allow companies to have international contracts, right? The third point, Abu Dhabi is home for people over 200 nationalities. And you have, all the conditions to live there. You have that is the safest city of the region, or the safest city of the world, the happiest city for expats, and all those rankings are true. But I think what really matters, and hopefully you can, pay a visit to Abu Dhabi, is that you will find thousands and thousands of testimonials that people that have lived, around the world. But once they settle down in Abu Dhabi, they probably call it, second home. And I'm just an example of that, of those many thousands of people. And last but not least, a government that is totally committed with the continuous improvement of the business environment. And you have a lot of examples to say so. We have allowed now, for example, 100% foreign ownership in different businesses. We have reduced the cost of, to open a business license. We have facilitated the process to do so. The government has signed very important free trade agreements. We have just signed a free trade agreement with India, with Egypt, with Indonesia. So what we are talking about here is not a market of 10 million people. What we are talking about here is an ecosystem that allows you to have a preferential access to a market of 1.8 billion people, which again, you are not going to target the entire population, but let's say that you target middle and high class population, which is 300 million people. And now we are talking a market size of, the US or Brazil or a big market. That is a market that we are inviting you to be part of it. So to answer your question, yes, I think the sovereign wealth funds, and sorry for the roundabout.
No, it's good to get that sort of background on the region.
I think the sovereign wealth funds, yes, they are a very important tool for the development of the economy of Abu Dhabi, but I do believe it's the actions that the leadership has taken that has created this ecosystem to cover the entire world.
Well, okay, that's a great rundown of the opportunities there. Thank you for that. We've got about 10 minutes left. I'm keen we get to some more meaty questions that will test Bruno's patience with me. So let's talk about valuations. So we've seen public markets go through a very tough 2022. It's been the worst year for 60/40 portfolios for many, many decades. I've seen the scatter plot. I didn't see any other dot further down to the left. So lots of tech stocks down below 40%. Surely private investors and LPs will be sort of looking at the asset valuations of their private assets a lot more keenly than they might have in more benign times. Can you talk us through, how you approach that valuation process, especially in the current environment, and why accuracy is so important?
Thanks. Evaluation is key, of course, in private equity, and it's important to understand this point, not only when you have to perform your quarterly report, you have your quarterly fulfillments, and not only when the public market drop dramatically, but also when you start thinking to invest in private equity. Therefore, from the screening of the market, of course, I'm talking from an investor standpoint, in our screening, we also consider the historical capacity of DGP to provide a good estimation of the net asset value of valuations. And then we check which had been the subsequent realization compared to the previously reported NAV. So valuation means, therefore, moving from scratch and then going through the process. The valuation methodology in light of the recent market dislocation have not changed. So fundamentals of the underlying target company remain the basis for providing a good valuation. Of course, also public market multiples have to be taken into account. Yeah. Maybe what's happened in recent years is offering a good example of how public multiples are meaningful to private equity valuation approach. If we see, for example, just after the pandemic, we take the Standard & Poor and other private markets multiples, we could see just after the pandemic drop that both index could report some approximately 11 times enterprise value on EBITDA. After that, public markets, Standard & Poor, steadily climbed up to some 17 times by 2021. And then Standard & Poor's decrease down to some 13, 14 times by the end of 2022. In the same period, the same multiple for private markets remained basically stable at 12 times. So the first consideration is that the correlation between private and public multiples is quite low, and the time frame in which we consider potential comparison is key to understand if there is a correlation or not. But most importantly, in private markets, there is a huge diversification in the underlying targets. Therefore, the correlation among private market is very low compared to what you can find in the limited number of listed companies. Yeah. On top of this, private equity is offering as well the possibility to be quite diversified by vintage. So within your portfolio construction, you can also rely about this. But most importantly is the fact that the public prices refers to an average, a very small proportion of valuation, because when you make some trading, you are trading, you are buy and sell very limited portion of a company. Private equity, the price, it's a solid price because it relates to potentially 100% of the last majority of the underlying company. And therefore, the pricing construction must be very solid because it must resist over time.
Yeah, yeah. So it's, a lot of that is that sort of long-term outlook of PE helps you look through the temporary ups and downs. Just reflecting on what's happened in public markets, you know, there's been a lot of commentary and discussion around the denominator effect and how that could curtail investors' appetites for more PE and wider alternatives investment in the coming year. Can you talk us through about you know, which types of investors where that might be more relevant than others?
Yeah, it's a real pity to be affected by the denominator effect, which is, of course, as we know, related to some maybe too much rigid approach at corporate level. So in current times, of course, the denominator effect is basically limiting the asset allocation to private equity, for example, in the moment in which you should continue to invest because you have the possibility to take the opportunity of potential lower prices, lower multiple in the market. As investor, luckily we don't have this because also the relative ability to manage the corporate discussion. So when in the table risk management, tax, legal, accounting, and all type of corporate compliance, you need to relax them to explain that because of the specific market feature, it's the moment to stay on the market instead of limiting the allocation. Another important thing at this respect is that fact that the private equity must be understood as a very, very long-term asset class. And therefore, you must consider the future discounted as of today in order to really understand what can you do.
Thank you very much. I'm conscious of time. We've only got a couple of minutes left, so I want to touch on one topic which has somewhat fallen off the agenda of late, given what's happened in public markets and a sort of focus on portfolio returns, which is ESG. So the challenges at the markets last year have sort of split the pack. A lot of investors' commitments to ESG have been tested, particularly because you know, conventional energy sector has been doing incredibly well, and a lot of investors will have screened away from investing in things like hydrocarbons. What are your views on where the ESG agenda is at? And have you seen investors sort of turn down deals and maintain their commitment to ESG in the last few years? And what about your practices in ESG? How do you approach the topic?
ESG is, of course, a must-have, even though we don't believe that, at least so far, it is in itself a driver for creating value.
Yeah.
So, of course, we have very rigid, since 2015, a very rigid list of prohibited investment, according to which we cannot invest at all. So it's a must-have for us.
Yep.
So having said that, for example, we don't like too much potential carried interest also linked to ESG metrics, because you must have, in any case, ESG metrics. So financial returns is another stuff. And what we are currently building up, it's our own proprietary tool in order to set some quantitative metrics for ESG. We are still waiting for understanding which are going to be the formal rules for putting the label Article 6, 8, 9 in Europe or other concept in other continents. Because so far it's not clear if being Article 8 is something that the GP is, let's say, proposing but not granting, or it's a matter of providing the investor with all the information available in order to allow the investor to check at each turn if Article 8 is fully respected or not. Or third concept we are waiting for as well is that some third-party assessment could enter the market in order to provide to both GP and LPs the adequate comfort on such label.
Great, thank you, Bruno. I would like to push on with more questions, but we are just past the half hour. I don't know if there's time for a couple of questions. If anyone in the audience would like to pin our panelists to the mast and ask a question. Okay. In which case, that's fine, because then we can sort of keep to schedule and push on with the next session. I'd like to thank my panelists. Bruno, Augusto, please show your appreciation in the conventional way. Thank you.